If you can find a profitable company with strong fundamentals that also pays monthly dividends, that's what we call a win-win situation. And since I love to win, and I love to see you guys win, we're going to look at why Realty Income Corporation, ticker symbol O, is one of the top monthly dividend-paying stocks to buy and hold for 2022 in today's edition of Constant Cash Flow. Before we jump in full force, I want to give a really quick shout out to two recent subscribers, Hernare Brown and John James. Thanks for watching, subscribing, and the great feedback and comments. You guys are exactly why I make these videos. Now, let's get right into the good stuff. Realty Income Corporation is widely considered one of the best monthly dividend stocks, and with good reason. While it may not be as flashy as Arbor Realty, one of the stocks I recently reviewed and am extremely high on, it is one I choose to hold as well due to the fact that it provides a consistently good dividend return with the added benefit of paying every single month. Realty Income has branded itself as the monthly dividend company, and it's hard to argue that they are the premier stock in that category. They're a member of the S&P 500 and the S&P 500 Dividend Aristocrats Index. They were first listed on the New York Stock Exchange in 1994 and have provided their shareholders with over 15% in annualized total returns since their inception. They are the model of consistency, having paid dividends for 617 consecutive months, with 97 consecutive quarterly increases and a 4.5% dividend growth rate since 1994. Realty Income maintains a diversified real estate portfolio of nearly 11,000 commercial properties subject to long-term net lease agreements. The properties are leased to around 650 different clients operating across 60 industries and located in all 50 states, Puerto Rico, the United Kingdom, and Spain. The majority of Realty Income's properties are leased to retail clients that have a service, non-discretionary, and/or low price point component to their business. Maintaining a diversified portfolio helps ensure the stability of their revenue that supports the payment of monthly dividends. Some of their largest clients include 7-Eleven, Walgreens, Dollar General, FedEx, Family Dollar and Dollar Tree, AMC, and Walmart or Sam's Club. In addition to their stellar track record of consistency in shareholder returns, Realty Income has also maintained strong year-end occupancy among its assets that have never dropped below 96% and currently sit at 99%. O currently trades at $71.90 and has a forward dividend yield of 4.11%. Its stock price alone is up almost 18% over the last year. Couple that with their current dividend yield and you're looking at a 22% return over the last year, which is excellent for a stock that's paying a consistent monthly dividend. Compare a $100 investment in Realty Income to several standard indices since its inception, and you can truly see its power. It completely blew away the equity REIT index, the Dow Jones, the NASDAQ composite, and yes, the S&P 500 over that same time period in stunning fashion. It has a 5-year dividend growth rate of 3.5% and has grown its dividend in each of the last 24 years. As I've alluded to, it does pay a monthly dividend, with its last declared on December 15th for 25 cents and will be paid on January 14th of 2022. And unlike many monthly dividend payers, its stock prices perform very well also, returning 18% over the last year and 104% over the last 10 years. Its detractors will call out the pandemic hit in 2020, where O was heavily invested in movie theaters at about 6% of its portfolio. But CEO Sumit Roy points out that it's recently reduced that percentage through strategic acquisitions. It should be noted that it's not out of the industry altogether, though. With Realty Income being a 52-year-old company, they've dealt with inflation before, and they're strategically positioned to handle the current and coming impacts. Most of their leases are structured as triple net leases, which means that besides paying rent every month, the client is responsible for the property's operating expenses, taxes, maintenance, and insurance. This lease structure reduces their exposure to rising property operating expenses caused by inflation and preserves a predictable cash flow stream to pay that monthly dividend. Before I consider valuation, I always first analyze the business quality. Like many net lease REITs, O exited the pandemic stronger than it entered it. Leverage has come down, cash flows have gone up, but the stock price is lower. Acquisition volumes have also fully recovered to beyond pre-pandemic levels, a good sign that O's making up for lost time. I think this is a critical moment to discuss how Realty Income differs from shopping centers and malls. While these all represent different types of the retail REIT sector, I view net lease REITs as being substantially less risky than shopping centers and malls. While one could make the argument that O's convenience store tenants are not as sexy as a tenant like Peloton, there's an important structural difference in the business models. Malls are large assets which do not have ready liquidity and thus cannot be easily sold. Shopping centers are smaller and can be sold or repurposed much easier than malls, while also having far fewer tenants, making it easier to fix struggling occupancy. Net lease properties excel on all fronts. Because these are single-tenant freestanding properties, it's exceedingly easy to re-tenant or dispose of such properties. This greatly reduces the downside risk of investments, as O can get rid of the properties very quickly instead of having to suffer from opportunity cost. This important distinction is why I can be bullish on O and yet bearish on malls in spite of it trading at a premium. Seeking Alpha gives Realty Income a consistency grade of A+, citing its stellar payout performance and increasing dividends quarter after quarter. Both its 28 years of dividend payments and 24 years of consecutive dividend increases far surpass the sector averages. I expect to see O continue to increase its dividend in the 3 to 5% range each year, and the stock price still shows short-term upside in the 15% range, giving us a potential total return of 18 to 20%, on par with the last 10-year averages. As I dug into Realty Income's financials and business structure a little more deeply for this video, I became even more supportive of this company now and confident in its outlook for the future. I feel really good about where they are and the business fundamentals they maintain. If you're looking for a monthly dividend-paying stock that holds its own against the best and has a solid outlook, I would encourage you to take a closer look to see if it's a good fit for you, your goals, and your investing strategy. Let me know in the comments if there are any stocks or any type of stocks you'd like to see in a future video. On the right, you can find more videos, including my current favorite REIT stock out there, Arbor Realty. Thank you so much, and see you guys next time.